Hey traders, what's going on? Jamie Setley here, July 3rd, 2018, doing the webinar a day early here, obviously, as tomorrow is July 4th holiday here in the US, and market or US equity markets and stuff close here in 2 hours. They close early for the day, obviously close tomorrow. Typically around, with that happening, you're going to have obviously thin markets and not a whole lot of flow going through. So more than likely, you're going to see most markets pretty muted for the next day and a half. By the way, can you hear me? And can you see the screen? Yes, says Peter. Okay. All right. So I might have a very short update today or tomorrow, but it is likely that the next update will be on Friday or on Thursday, excuse me. If there's any trades to put through, which is a possibility, of course, over the next day and a half, then I'll take to the Twitter to do that. But I want to focus on the current sentiment right now in the dollar. So in last night's update, last night's post, I did talk about or note this article in the journal from yesterday. And it's important in that where it was featured, okay? It was featured on the front page of the business section. So let's 702 section B. All right, so dollar rally ripples worldwide. So it is important that it was on the front page in the lead article on the business section. So, when that happens, again, think of the logic of this, right? We've talked about it a lot. Some of you that are new, this may be a new thing, but the fact that it's dedicated to the front page, the business section, is kind of a big deal to me. Right, it means that everyone knows about the dollar rally at this point. It's popular. If it weren't, it wouldn't be written about on the front page of the journal, right? The journal is in any news outlet for that matter, is in the business of getting readers and getting eyes. So they are going to dedicate their lead articles and their big bold text to things that are seemingly popular and all known about, right? Again, this isn't as good as, say, the one that we had back in November of last year. I think it was November, talking about, it was like something about, the dollar is set to decline or set to rally on repatriation flows, right? Those are the best ones, right? The ones with the predictions in them are always the best. We don't have that here, but it's still pretty good, especially when we read through the article. So won't read all of these quotes. You can read them, you probably already have. But some that really stick out to me, investors are turning skittish on assets that could suffer under a strong dollar, including gold and other raw materials, right? Not a coincidence that gold's up 14 bucks today after that. That's what market lows are supposed to feel like, right? Investors turning skittish. That's the point, right? Investors aren't confident to buy gold when it's a good time to buy it. They don't feel good about doing it. I don't understand how anyone sits back and imagines a story where the dollar goes down, right? It's the exact opposite of what happened, or the feeling, if you will, back early in the year, January and February. No one could understand how the dollar could actually go up, right? It was the opposite situation. My favorite with this stuff is they actually talk about or reference the positioning COT data from the CFTC as if it's like a bullish thing for the dollar, right? Hedge funds just turned, and other short-term investors turned bullish on the dollar for the first time in a year, according to data from the CFTC. Well, first time in a year was June of 2017, July of 2017. this is June of 2017. They turned bullish here, and this is what happened. They just turned bullish here, right? What do you think is going to happen? They say the same thing about gold. Net bullish bets on gold are at their lowest since January 2016. Well, that's when gold bottomed, right? January 2016. Where is January 2016? January 2016 is right here. That's right here. Right there is January 2016, right where my cursor is, right? Low was actually in December, and right here is January 2016, and that was before gold went crazy. So it's almost like they cite these things as reasons for gold to continue going lower and the dollar to continue going higher, whereas in reality, that's actually what you want to see if you're a gold bull and a dollar bear. You can see today's low is actually on gold, by the way, 1237 and change, just below 1238. So we're going to take this out. I don't know. Today it would have liked it, I guess, a little more if you would have taken that out, gone to 1236, 1235. Didn't happen. Don't know if it will at this point. Yeah, so just this sentiment, right, is one-sided, to say the least, and that is what the market needs to turn. Simply, right? That's just what a turn looks like, or what it feels like. And their sole counterpoint in this article is the last paragraph, and it's right here, last paragraph. Here you go, and it's right down here, okay? And I've got the text on here. Not everyone is counting on the dollar rally continuing, blah, 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 blah. This guy says he's looking to lighten up on dollar bets in the second half of the year. So I wouldn't even really call that a bearish dollar comment. I'd call it more kind of like a neutral comment, right? So it doesn't say anything about going long euro or short dollar or whatever. It's just he's more like, well, I might get out of my dollar long bets. All right, so we think about this sentiment, look at the sentiment, am aware of this sentiment, and then we look at what's going on with the price chart, and this is a weekly chart, and funny enough, we haven't gone anywhere since at the end of May, really, right? I mean, this is the May high, and granted, I thought that was a top. It wasn't. This was ECB. We went in, thought this was a top, went to test the high to the tick last week, and now we are, right here. So you've got all these candles, all these wicks on the weekly chart at resistance, and that's, to me, that's a kind of a hallmark of a dollar, of a market that's really going, that's like super crazy bulled up, and is really primed for a nasty move to the downside, is when a market really doesn't go anywhere, but yet you get the sentiment such as we've seen here recently, right? And the DSI, again, I reference it every once in a while, daily sentiment index. It's a short-term sentiment survey, and I reference it every once in a while. I don't get it. I just have, I have some friends, trader friends that do, and they'll tell me, I'll ask them every once in a while when I think that we're at, things feel extreme. I'll say, what's going on here? And they'll tell me. I mean, we've had 94%, I think, was recently where we were with DXY, and we've had euro, pound, Aussie, Kiwi, CAD, all in the last couple of weeks have all been sub 10, as well as gold and silver. So the sentiment, needless to say, is certainly there for a fairly long-standing turn, in my opinion. All right. So there's not much else to talk about with this chart. I mean, we've talked about it a lot. You're on the 200-week average, by the way. Pretty good spot for a reversal or a turn, and parallels, et cetera, et cetera. The sentiment deal going on, and we've got the little divergence here, or non-confirmation, right? We went and tested the new high here in DXY. Euro actually did not go to that low on Friday, or Thursday, excuse me. This was Friday. So heading into the holiday, working on a double inside day here in the dollar after this big drop. I think we're headed lower. That's just all there is to it. Okay. So getting into then the individuals or their components here. If you're just long euro, I have a feeling it's going to work out. I'm trying to be a little more disciplined in that, but this is the daily. This is to me your kind of breakout level, right? This little quick spike, remember that was ECB, lasted about 10 seconds, and this is your trend line. This is your breakout line. So I'd say anything over really yesterday's high, Monday's high, is a legit breakout, and I'd be throwing an order out at that point to tackle the long side. So that's I'm gonna keep it simple here. That's where I'm at. That's where my head's at. I think we're headed a good deal higher in euro, even if say this is just a corrective rally. I think you probably get up to at least 1870, 1880. You gotta love this still, right? Still on big support. And in the short-term picture, as far as that's concerned, this is the one from last night, the 4-hour chart. I go to hourly, and this is still a possibility, right? With the 5 waves up and getting a, maybe an A, B, and one more shot lower in C. As I wrote last night, don't want to get so-called too cute. That's what, sometimes I'll explain it, and trying to be like so perfect that you miss what you think's going to happen, or you miss the move, right? There's nothing worse than being right and not being involved. So we want to stay away from that. At the same time, you don't want to have trade with FOMO, right? So there's like a fine line there in between trading with FOMO and trading with, being too precise on the entry, right? Or trying to be too perfect. Again, heading into this, excuse me for a second. Heading into the holiday in kind of a strange week, if you will. Definitely probably not the time to force it anyway. So, we get through this line, we'll say, let's do it. Let's just take a long position. Otherwise, might as well just wait and see if we are allowed to get in down here. That would be really a gift, but we shall see. All right. Another thing is the seasonal aspect to all of this. So let me pull that up. So seasonal wise, so here we are. This obviously is a weekly chart. So after this week, as we end this week, right, we go into a bearish seasonal bias, and it's across the spectrum in terms of look back periods. So like 30-year, right? 5, 10, 15, all tend to top and go into a downtrend throughout July, okay, into early August before the next so-called seasonal bounce occurs. So that is also, a piece of information when combined with the levels, the sentiment, all that stuff really makes, I think, for a great trading environment for the dollar on the downside. All right, let's take a look at cable, and it's like this for a lot of currencies. Okay, so like if I look at euro, right, it's just the opposite. You look at the same thing. Okay, here you go. 8.3, 8.24. as far as your next topping points, right? Cable, similar deal, right? Going into 8.3. Australian dollar, same deal. You can see here, going into a strong environment. Even the New Zealand dollar, which has been completely destroyed of late, goes into a seasonal positive environment for a little shorter amount of time, but still does. Dollar yen enters what would be considered one of its most bearish periods of the year, especially on the longer term picture. Okay, you know, that taking us down all the way into October before you get the October low. This is more indicative, of course, of kind of broad macro trends, actually, like, you know, going into a bearish period, you know, in global equities, right? And then you get into the October period where the saying is that's October's where bear markets go to die, right? So let's not dismiss the seasonals. Crude oil, by the way, this is the seasonal topping out point is last week. And interestingly enough, we've actually turned down pretty sharp. We're down 1.5%. So gold, again, not going to be a shocker here given the dollar stuff I just talked about, but this is a seasonal bottoming point over the last 5, 10, and 15 years for gold, heading up really through kind of most of July and August and into September. All right. So do want to highlight that. Kelly asking, can you give your view on euro yen? Absolutely, I will take a look at that, Kelly, towards the end. You got it. We just looked at euro dollar index. Let's look at the British pound. So we are long some pound here from yesterday, and let's go to a nice clean chart. I think the pound's first test is probably, if it happens over the next couple of days, you're looking around 33.40 or so. And that's probably where I'd want to be getting out of this piece for a bit of a pullback. Although, again, want to let it run if we really start moving. It's just, you know, the parallel here, it's beautiful. You know, came down to the region of basically support last October and November, and false break. This is the trend line, right, from 2017. False break to spring this higher. We have the stop moved under today's low. So today's low, last night's low, 31.15, 31.10 stop. Simply kind of like how you can see how price ended up hitting the support line, the 2017 support line back here, and then actually crossing through it the last 2 days, working on an inside day here today. So really don't want to see us below the inside day low today, which would be 31.15. So we're sitting in a pretty good spot, I think, with the British pound, right? Basically have 20 pips of risk on the table and looking for at least, you know, another 150. So I do like that position, if you will. It's a good bet, good place to be. Near term, right? Testing this, you'd think or expect. This is I have a fork drawn here, as most of you know. When it's not confirmed, I have it drawn in gray. This is not confirmed yet because the median line has not been hit. But if we can really get moving over the next two days, you could get up to that 33.30 area, right? And at some point in the future, you'd expect the 32.20, 32.05 area to actually provide support. That's your old resistance, or it's still resistance. I shouldn't say it's old because it's still resistance. Mahai asking, why do you choose trade size for 1 for pound dollar? Well, so here's the thing on trade size. You got to remember, it's also about the risk. So if I, you know, buying at 31.30 and the stop is 30.50, right? So for me, that would be, you know, what is that? That's 80 points. So that would be 80 basis points. So for me, I'm risking 80 basis points on the trade, trying to trade a turn. Um, it traded up here, can get out, buy the next pullback, and that one would be a trade size of 2. I also like with pound, I'm always wary because of the all the Brexit BS headlines that come out, and you're kind of at the mercy of these price spikes. Whereas with euro, I'd rather be trading a trade size of 2 at some point, or even Japanese yen for that matter. I'd rather be trading a trade size of 2 for that at that point. It's also a weird week, right? I mean, you got the holiday and thin markets, so it's not like ideal, like a ideal situation to really step on the gas from that standpoint. It's an ideal situation to step on the gas from a sentiment standpoint, the dollar, and from a where the dollar is, on the chart, like the resistance and we see this resistance with these wicks on the weekly chart, but there's other stuff involved, right? Holiday trading, blah blah blah. That's just me. I'm not saying that's right for everybody. That's me. All right. So with cable, by the way, I would expect to see support at basically 31.50. You can see over here, it's square root level, lows, all that good stuff. And I'll leave it there. So we get over this level, then yeah, I'm not saying that I won't press that trade and add another piece to it and trail the stop up at that point. Okay. Here's a good little tidbit too. You can see the high volume level from over here on Friday. See that pullback where we hit today? That's a good sign. So let's look at the Aussie daily chart and the Aussie weekly chart. Okay, Aussie daily. Noted the possibility yesterday of maybe getting excuse me, of getting a diagonal on the downside. That does not look to be likely at this point, given that yesterday's drop is essentially almost completely erased. So with that, what we want to do on the Australian, look how big that level is, right? We have a 618 of the entire rally from the 2016 low. We've also got the May 2017 low, so low from last year. We've also got this little guy over here. What was that? That was the November 2016 low. So there is good support around there. There's support there after Brexit, actually, right here. So you're on a good spot. I'm looking for Aussie to get going on the upside, and maybe from a good larger swing position. Also, if you subdivide the rally, or sorry, the decline by this, so you kind of have like maybe it's choppy, but you get the idea, right? Maybe like an ABC. It's probably more like ABC X ABC, right? To get real specific with it. Then you're talking about, getting 2 equal legs down. So with the Australian dollar, I mean, really, this little dip right here might be it. Do think there's better places to play. I'd probably be more willing to trade on this line because you also have a square root level there, which is kind of where you found support before, and that would be 73.60. So 73.60 would be an area for me. to put on something on the long side. Also, if you look at it from this standpoint, let's get that 5 up off the low, right? 1, 2, 3, pull back 4, 5, pull back 73.60, and then for the next big leg up. And if you did get up to this median line here, 73.55 would be your 618. So that's that's promising. So to give you, Aussie levels for the foreseeable future, probably something like this, right? That would be that's kind of where my head's at there. So 74.30s, pull back to 73.60 or so for the next big run on the upside. All right. Let's resume with even the New Zealand dollar is rallying today. I mean, what's going on? So Kiwi, I don't think we hit the May 2016 low, did we? Or was that May 2016 low? 66.75. It did not. Got pretty close. 66.88 today. But this channel is pretty good, right? There's the blue line. This chart, noted this chart for a bit, and getting a good rebound off of the lows here. Or off of the channel, I should say, in Kiwi. Kiwi is a little difficult for me from the long-standing low. Maybe it is simply an overshoot of the 618, which is 67.41. Remember, though, the next really big level is not for a while. That just tells me that I'd probably be, more willing to trade Aussie on the long side than Kiwi at this point. However, if you get we get a promising setup in Kiwi itself, then it is what it is, and you don't really need to think about it too much. Working on a reversal bar today, as we did tick to a new low by one pip today, right? Getting back over the old low at 67.83, you'd have potential for a false breakdown. 5 down here, 1, 2, 3, 4, 5. So looking for a move back to the 70.50 area anyway. Point being is that it still lines up as, as a, still lines up as a dollar, bearish scenario. Dollar CAD. So where's the chart that I had from the other day? Hold on. Dollar CAD. So this was that chart. We came into the what I would call kind of original or initial resistance, kind of the bottom of the zone, right? We had basically 132, 132.60 lined up. Like it on the downside broadly, not as much as some of the others, right? Especially if we're going into somewhat of a shift with, say, away from the really strong energy sector to maybe more a strong mining, right? You might favor Australia over Canada at that point. So that's where my head's at there. We'll still certainly watch it. If we draw a fib off this top, off the drop here, 3280 is a little much for me. I wouldn't want to see it all the way up there, but if you have a 5 down, say like, let's go to a 60-minute, kind of a 1, 2, 3, 4, 5, maybe an A, B, C, I'd still watch this 3260 at some point. Okay. The weekly chart on CAD's really interesting, right? Kind of like look at a chart and think back and think about what could be happening. If we look at this weekly, we had this spike above, I would consider this median line quite significant, right? So like, resistance, resistance, resistance for all the big tops going back almost a year, going back to August of last year. And we reversed right through it, right? This would be a false break above, big reversal below. And if you look at it from a classical charting standpoint, this could just be kind of like a big wedge, right? So either way, focus is down here on the 2017 or 2016, 2017 line, which was resistance for like 2 weeks. And that would take us down over the next couple of weeks. You're getting down below 130. So still, good downside from here. From here. All right, dollar yen. So dollar yen's getting a nice turn here today, a nice reversal, big reversal. We actually came into daily reversal resistance for the last 2 days. All right. So there's that. So that might be it. I was looking for maybe a bit more of a push to this. We had this chart up last week. This is the magenta parallel, relates to the 2015 trend line, and you can see that would have been more like almost a test of the May high or close to it. Not excuse me, not getting that. So from here, gonna be watching this, basically watching this median line, which over the next day or two is like 110.40-ish, right? But you do have a good reversal day here, so that could be it. And maybe an ABC up, right? Down, complicated ABC up for sure. But resistance at this point going to be 1085, and I actually think that it'll be worth in order at that level. Let's go 60-minute, 10-minute. Getting decent impulsive action on the downside. And you can see the 1080s is actually where the 200 period average is on the 10-minute chart. Trading into that level, it's actually been pretty good strategy for a while. So that's where we are with dollar yen. Again, nice reversal, rolling over, going into the seasonal, I can't even talk, the seasonally bullish yen period, which is bearish, of course, dollar period. All right, now let's get to some commodities. A lot of interesting things happening in commodity land today, and that being crude rolling over and gold getting up off its butt. So here's that gold chart. We've had this 1236 level mark down for quite a period of time. Big outside day today, right? Got to make you think that, look, we're $1 off, and got to make you think that that was it, right? Here's the weekly chart. This is a chart from last week. Better find support here or blank. Watch out. You can see I actually have on my trading view thing, I had an alert set up at 12:36, hoping we'd hit it. Did not hit it. Excuse me. But you have to look higher. You have to look higher here in gold. Let's go to an intraday chart. All right. Obviously, we're straight up off the low, okay? So, you want to see some back and fill from a low. I mean, even looking at some of the really big lows that you've had, like this would be last December, okay? You know, 4-hour chart, big rally, pull back, right? Even then, you had a pullback, right? Even here, big rally, pullback. And the pullbacks happen from like the same place too. That's the 50-period average on the 4-hour chart. So I kind of watch for that again. I'd watch for this. Where we are now, we might pull back a bit, right? That pullback is the one to watch for support, see how it holds, and then, look back towards the, just look higher at that point. This, by the way, is going to be your more important level for resistance for gold. Based on my belief of what's happening with the dollar, I thinking it'll probably be a temporary resistance up there, but it's kind of where my head's at there. Silver, not as clean as gold here, but let's go to the daily. The setup here would be, so you had this, essentially a breakdown from the ascending, or not ascending, but from the symmetrical triangle. And if you did get up through, assuming we got back up through this level and close back, say within the triangle, I would simply call that a false break to the downside. That's all, right? False break to the downside, and that would then be a bullish signal for silver, okay? So like from a classical charting, perspective, this is a bearish signal here. You get back up, it's a false break. False breaks themselves are signals. So we'd be looking for long positions in silver at that point. If the gold interpretation, the hold of this level is, the right interpretation of the right thing, then certainly silver should probably just head higher from here anyway. But based solely on this chart, that is what you want to be looking at or looking for, right? Is a move into the prior triangle to tell you that this move lower was the wrong move, okay? Now let's go to crude, which, I had if any of you have the Bloomberg app on your phone, it's not the actual terminal, but like the, just the Bloomberg News app. So I'll pull it up right here. The Bloomberg News app, I had 2 hours ago, Bloomberg, WTI oil hit 75 bucks a barrel for the first time since late 2014. Literally the exact top when you get something like that. The fact that it's like the same idea as the Journal or studying sentiment news headlines, right? You get a pullback or a move like that, and it's all of a sudden like broadcast to the world. Well, now everybody knows about it, right? So the strong hands are selling the weak hands at 75 bucks, and 75 bucks, of course, tweeted a chart out earlier on the public Twitter, but you can see that's the October 2011 low. It's a pretty darn big spot, wouldn't you say? And if we look at the, the channel from Jan 2016, this whole area is resistance and this whole area is support. So, am I calling an end to the bull market of crude? No, I'm, not really there yet. But is it time for maybe a volatile pullback, right? Like this, maybe come all the way back here. That would not be that big of a surprise to me. So putting in a pretty solid looking reversal day here, right? It will take it, we'll take it, as it comes here. But you got maybe a 1, a 2, big 3, stubby 4 and 5 could be it, right? And this makes me think when I'm looking at the crude oil chart, what about looking at, maybe we think Aussie is a better play than CAD. If we look at the daily chart of the Australian dollar Canadian exchange rate, it actually looks like that is indeed the case. Like long Aussie CAD, right? Again, we haven't had this relationship for a while, but long Aussie CAD used to be like long copper, long gold, and short, probably more long copper, and short Canadian or short oil. But you've got a pretty clean 5 waves up, don't you? 5 waves up from the low in May and a 3-wave move down. Tells me that, maybe we're seeing the right thing, or maybe I'm seeing the right thing. Crude is actually coming into a top and the Aussie is actually bottoming. You can see trading around the 618 here for the last 2 days. So, I will probably most likely be focused much more on the Australian dollar over the coming days and maybe weeks, say, than the Canadian dollar, insofar as playing it against the U.S. dollar is concerned, right? I think Aussie is a better bet on the long side here than the Canadian dollar. That's all there is to it. And that's actually from not just this, crude oil thing and gold and whatever, but also from the seasonal standpoints, right? We're going into a stronger Aussie period than Canadian dollar period, and the positioning, right? The COT positioning, Aussie, very depressed in terms of its ownership profile. Let me pull that up actually, real quick. Okay, so here you go. Here's Aussie dollar, and you can see the positioning. We are the lowest since back here, so essentially the lowest since December of 2015. Not a whole lot of love for the Australian dollar by the speculators right here, is there? All right, let's take a look at some indices, and then we will move on to, I know that we had a question from Kelly, wanted to look at Euro Yen. Okay. Start with the Dow actually. Pretty volatile week, 6-7 days here, right? Ever since the sell-off on 625, market's done really nothing but consolidate. I still think that you're going to go down to the 23,800 spot, and at that point, the market has to make a decision. Okay, that that's a big area. Okay, just trend line off the lows. You've got starting February and then the April low, and it hits the May low right on the nose, and that's going to be down there. And you've got all these lows down there too from April. Okay, kind of the crash day low, if you will, from 2.5. So just a lot of stuff down there, right? Typically, you'd expect the Dow actually to do okay during a weak dollar environment if we're going into one, but it takes some time, right? Earnings coming up, third quarter or second quarter earnings coming up here in a little bit, and they'll report third quarter, but it'll be report second quarter in the third quarter. And you're going to have, probably a lot of comments about the strong dollar from some of these multinational corporations. But I would be looking at this level, 23,800, is simply a trading level, okay? NASDAQ, let's go 4-hour chart. Might be done, right? ABC up. We didn't have to get to 71.83. That would have been ideal, but it doesn't have to happen. So we might have a rude awakening after the after the holiday here in the U.S. That's where the trade is, in my opinion, at least on the downside on tech. S&P, kind of a mess, not nearly as clean as the tech stuff. When we look at SPX 500, you can see actually this is again 4-hour chart. We're coming right up on this 200 period average on the 4-hour chart, which is flattened out. Okay, that average is can be pretty good in terms of a pivot. So I lean towards the short side on the S&P. Maybe not right here, right? You could come up and test, a little higher, try to take out some of these highs over here from late last week, but I do lean towards the downside on the S&P, albeit maybe on one more little pop. Okay, you can see the good sideways or good horizontal level you've got here, going back to the May 13th high, right? Good resistance on 522, good support for the final run or a final run. Spike below it, closed on it here on 619, and then since then, spikes up into this level. So I call 2740 to 27, say 44 or so as really a big spot for the S&P. Okay. Nikkei looks not great. The Nikkei has been destroyed here for a couple days. It was down like 450 points yesterday, and the dollar yen was up. So yeah, that tells you what kind of environment we're in. Really all about U.S. yields at this point, apparently, because they're just two totally different things now. So either way, I would pay attention to, if you did get a bounce in Nikkei, I'd be looking at this 22,050 area, right? You can see all the circles and the horizontal levels on it. When I go to a daily chart and scroll back, to me, it's a pretty important thing that you've hit, this parallel, this magenta parallel, which did hold up pretty well as resistance and then support since April. And we really cracked that yesterday. So, below there to me is a pretty dangerous sign. And I'm looking down towards 21,060 with resistance again, probably near 22,050. And maybe if you get up there, 22,170. Again, thin markets going into the holiday trade. So you could get some exacerbated moves from that, ironically. But Nikkei at this point, probably a sell on strength until at least, I would say, I know the 618's right here at 21,360, but I'd be looking more towards the 21,000, basically 21,000 area. Okay, that's going to be this parallel right here. which crossed a bunch of resistance and support earlier this year. Okay. Mahai is saying on NASDAQ, do I have a target? Well, the first level that I'm looking at, which now is probably, remember we were looking at the 6860 area before, but that's probably too shallow at this point. If we do have 5 up, 3 down, then we're looking closer to 100, the 100 extension 6850. That's kind of the middle of nowhere. I would be, frankly, I'd be looking down towards just the 200-day average at this point. You know, you got two spots really. You got this trend line, okay, which is going to be just below the low, and in this area of, you know, this floor over here from May. But then you got the 200-day average, which is going to be down near 6650 at this point, or it's a little lower, but 66, you know, 30 we'll call it, which is also a pretty good horizontal level. It's the 3-2 low, and that was former resistance from April. Okay, so that's where I would be looking towards. I'd also say, Mahai, that it's quite early to place a target on any sort of short. At this point, we kind of have to be still aware that you could have more complex correction up to 7180 area and then go lower. But irrespective of whether or not today was the top or this is the top, you know, I'm a seller on strength when it comes to NASDAQ. And that's that. All right, let's look at Euro Yen. Euro Yen back up on a pretty good resistance spot. I don't think that, for me at least, I don't have a dog in this fight in terms of trading Euro Yen or I'm you know, I'm a dollar. I trade the dollar crosses. That's, keep it simple. Have some rules. You know, what does this tell you? If we're at resistance, maybe dollar yen short's a better trade than euro dollar long, at least for the time being. But yeah, this is resistance. Okay, you're at resistance. You are at, this is, you know, simple channel line. It was perfect on support, and since then you've basically failed. Every rally has failed on a lower parallel within the channel. Okay, so, you know, if I had to make a trade on euro yen exchange rate, right, gun to my head type of deal, I would say, well, look at 129.20 as resistance, because that is actually where you opened the month. Okay, we're currently 28.85, so that's where I'd be, you know, claiming resistance, if you will. In terms of support, you're right here, 27.56. That is daily reversal support. It's the 619 close, okay? So those are the levels to trade, in my opinion, over the next week or so. I'd give it 29.20 resistance, 27.55, 27.60 support, and I'd leave it there. All right. CAD yen, we had a question on. I think it's, you know, I still like it on the long side in terms of just the setup itself, right? I mean, this is the daily. Kind of hard to argue that you didn't come off of really good support. So I'm sitting here saying this, and it's like, what the hell? That doesn't make any sense, right? This guy's saying that Euro Yen is at resistance and CAD Yen might be a long. Well, keep in mind, I said Euro Yen it's probably more like range, right? You're probably 29.20 to 27.60. In CAD yen, it's probably going to pull back some anyway, and I'd be looking for support on the top side of this line. That's all there is to it, right? So in both, you're kind of looking for a pullback anyway. I'd pay attention to this high over here. I'd pay attention to, if you go to a 60-minute chart, what's that look like? I'd pay attention to the 60-minute chart and the 200 average on it. So, if we pull back some, it's 1, 2, 3, 4, maybe a truncated fifth, I'm not sure. But if you pull back some, look at that 83.50 area at some point, either, next couple of days or whatever. And you don't have to be, you don't have to predict the future to make money, right? Like trading euro yen, if you really are bent on trading yen crosses, you can trade euro yen range with those levels and tight stops, and then maybe look to buy a pullback on CAD yen at 83.50 and a hold. You don't have to be able to tell the future in order to make money, in trading. So we should probably expect a pullback here anyway. I mean, this is the 200 average on the 4-hour chart. Okay. All right. So I am going to wrap it up there. I will have, again, unlikely that I'm going to have a post later tonight, and definitely not tomorrow, being the 4th. I do need to spend time with my family too. And if I do see a trade opportunity, which may very well happen over the next couple of days, I will send it out via Twitter. But I will have this archived as well, so that, consider it kind of like the post, right? But everyone have a great 4th as well if you obviously celebrate it here in the US. And thank you for your time, and enjoy time with your family if that's what you do, and have some good barbecue or something, and maybe some potato salad, and maybe some adult beverages, and jump in a pool or something. And I will be back with the regular posts, of course, as on Thursday. All right. Okay. Thank you all so much, and take care. And be safe. Don't blow your hand off with any fireworks. All right. Take care. Bye.